Well, hello, it's Richard Pears from FinextraTV. Delighted today to be joined by Sandy Trust. Hi, Sandy.
Good morning.
Good to see you. Just for everybody else, Sandy Trust is lead author on a series of climate-related risk reports, and we've interviewed him on a few of these before, working in that capacity for the Institute and Faculty of Actuaries, and here with us today in his day job as Director of Sustainability Risk at Bailie Gifford. Now, the report that we were talking about last year on Finextra TV was the one you did with Exeter University, and it was called The Climate Scorpion. The sting is in the tail. And there you introduced the term of planetary solvency. This new paper is called Planetary Solvency. Sandy, tell us, first of all, what was the reaction to the previous paper, and what does this new paper seek to add?
Yes, morning, Richard. Thanks so much for having me on here. And the interest in the papers. So Scorpion wasn't widely picked up by mainstream media, and probably kind of went less viral than Emperor's New Climate Scenarios. And there are some incredibly powerful and concerning points in Scorpion, both about tipping points, physical risk, the non-linearity of risk, the need to kind of capture those forward-looking trends. Also, climate sensitivity. So actually, this is a really critical assumption. How sensitive is the planet's greenhouse gases? Because that informs carbon budgets, how much time we've got, how much we can continue to emit, and also how important it is to have kind of cross-disciplinary thinking, to have science and risk working together. And we've talked about this before, but I think it's worth re-emphasising science and risk. Think completely oppositely. Risk, we're happy to talk about uncertainty, low likelihood, high impact events. In fact, that is risk management in a nutshell. Use of imagination to work out what could go wrong, and then thinking, what can you do to mitigate it? So science, on the other hand, well, they're uncomfortable uncertainty, and that's completely understandable, right? If I'm publishing scientific papers, I don't want to publish until I'm quite certain. So you need both. And just touching briefly on that carbon budget point, if people renovate a house, do up their kitchen, they usually have a contingency. It might not go perfectly to plan. I'm based in Edinburgh. We installed a tram that was 100% over budget. And you might remember Scottish Parliament building deadlines.
Mm.
Budget 40 million, cost 400 million, 1,000% over budget. So we know that budgets can go wrong. The Paris Agreement is a temperature goal. Net zero is a state where we reduce emissions, and carbon budgets are designed to get us down to that net zero state and achieve that temperature goal. Um, but there's a lot of uncertainty around modelling the Earth system.
Yeah.
So typically, you'd incorporate that uncertainty, you'd have a contingency, but because carbon budgets are set by scientists, there is no contingency and the uncertainties excluded. So that's a pretty significant finding. Actually, carbon budgets may be overstated. We might have less carbon budget than we think to play with. And as temperatures are already at 1.5 degrees, is it possible the carbon budget is already zero or negative? So that's the really incredibly profound and serious point from Scorpion. That was a really important finding, but it's quite complicated, it's quite subtle, it's quite nuanced. So not broadly picked up, but stunningly important. And so just to lead on to planetary solvency, um, we realise that unless we systemise this, unless there is a framework, a methodology, a reporting structure, a mechanism for repeating these messages, then it's going to be hard yards to get wide adoption, support from policymakers and other leaders. So we came onto planetary solvency and said, let's develop a framework, a methodology, a dashboard, if you like, to help us drive the planet, or perhaps more accurately, drive our activity to avoid damaging or changing the planet so much we struggle to not be disrupted ourselves. And although we don't think about it consciously much today, my 11-year-old daughter understands that you can't have an economy without a society, and you can't have a society without somewhere for them to
Yeah.
live. And we all live in the biosphere, and actually, the thing, technically, I suppose you could say, that supports society is what's known as ecosystem services. So this is things like, I know you're familiar with this, Richard, freshwater, climate regulation, food production, and so on. These are critical ecosystem services: food, water, energy security, human health. So planetary solvency is simply defined as managing our activity to avoid disrupting these essential services of nature that, make no mistake, we completely rely on. And once you've got that concept, well, it's a bit like a pension scheme. Pension schemes need to keep making payments to pensioners, manage their solvency. We need to manage the planet, so we keep receiving those payments: water, food, climate regulation, nature. And once you have a concept of solvency, well, great, we've got lots of bits of kit to help us manage solvency in financial services: risk frameworks, key risk indicators, risk appetites, all that kind of stuff. So planetary solvency is simply taking the risk discipline of financial services, marrying that with earth system science, and creating what we hope is a fairly intuitive risk dashboard to, as I say, help us drive the planet safely, like we own it, not like we stole it.
Yeah, and thank you. That's beautifully described. And what we'll do is we'll put a link to the dashboard in here so that people can have a look at it and play around with it, because it is pretty
Super.
intuitive to play around with. I've shown it to a few people. But you talk about this uncertainty, which is in the sort of this post-truth era. People say, well, there you are. They don't know. Here you're saying take an actuarial view of this, and we will talk about uncertainty in a proactive sense, and then how does the paper and the dashboard actually help people understand how to interpret and manage uncertainty specifically?
Yes. Richard, let's talk about crocodiles. So,
uh, that's a good step, and there's plenty of them in the swamp at the moment.
well, so you would think, right? But imagine you're in Africa, you've got your children with you, and people listening to this, imagine you're in Africa, your children or someone else's child. It's a hot day. You're next to a river. The child wants to go swimming in the river.
Hmm.
It's a muddy river. You can't really see what's in it. Are you going to let your child swim in the river?
No.
Are you? No, no, of course not.
No.
Have you? You haven't seen a crocodile, but there might be a crocodile. The impact could be catastrophic. There is high uncertainty. There's absolutely no guarantee there is a crocodile, or that the crocodile's angry, etc., etc. But I think the point I'm making here is that intuitively, we as humans deal with uncertainty all the time, and if there is high risk, then we say, well, hang on a minute, let's just not do that until we're quite comfortable we've eliminated that uncertainty. Maybe you can never know about the crocodile, and that really is the crux of it. As I talked about earlier. There are two kind of competing mindsets here. Science, which says, well, if I'm not sure about something, we shouldn't talk about it.
Mm-hmm.
It's uncertain. And actually, we'll have seen tobacco manufacturers using that tactic very successfully. We're not sure cigarettes cause cancer, so therefore we shouldn't take action until we are sure.
Yeah.
Which is, of course, completely the opposite of letting your child swim in the potential crocodile river, right? And risk, which says, we're not sure if it's a crocodile, well, let's stop. Or I'm sailing a ship, I'm not sure there's a rock, let's stop. So, depending on your mindset, that's going to drive very different behaviours.
Yeah.
I'm not obviously being a bit clear when I say the scientists would cheerfully let their children go into the river because we can't talk about crocodiles because it's certain. So you take that through to climate and nature loss. The what we've been doing when trying to estimate the severity of the potential impacts is to say, well, we should only include in our risk assessments those things which we're sure about and can model.
Mm-hmm.
So essentially, we're saying, well, let's start from a position of GDP growth that's carrying on, and then let's chip off things we can model. So we can model people getting a bit hot if the climate warms up and chip that off. We can model some physical risk events and chip that off. We can model, and so it goes. And if you read, for example, NGFS documentation, they're completely transparent about what they're not modelling.
Mm-hmm.
And they're saying, well, we're not going to model, or we can't model because it's uncertain, for example, sea level rise. But we kind of know sea level rise is going to happen. We're not going to model ocean acidification, but that could be very serious and consequential. We're not going to model human health impacts, but we know there will be human health impacts. We're not going to model any conflict. We know that climate, water shortages, etc., could cause conflict. We're not going to model migration.
Mm-hmm.
We know that we can have migration, and my particular kind of favourite hobby horse is a particular specialist, Professor Lenton, who we work with on his papers. We're not going to model tipping points, and tipping points. You can think of swinging back on your chair. It's all fine until you get to a certain point, and then you collapse, and there's a big kerfuffle, and it's tipping back. Well, the Earth system has a bunch of tipping points. The Greenland ice sheet, as it melts, it reduces in height. As it reduces in height, it increases in temperature. It goes into irreversible melt. That pulse of fresh, cold water disrupts ocean currents, disrupting what we would popularly think of as the Gulf Stream. That could cause significant shifts in climate and reductions in crops and so on. And the point, I think, why the crocodile is relevant is this is uncertain.
Mm-hmm.
We don't know exactly when tipping points will go, but we know it's pretty close to current temperatures. We don't know exactly what the impacts will be, but we also don't know whether we could successfully adapt quickly enough to what could be quite radical shifts in the environment. So in the paper, we simply say, let's take the crocodile approach. Let's assume we can't adapt to if we get to certain temperatures and level disruption, and let's work backwards from ruin rather than this working forwards from today and chipping off only things we're sure about. And that sounds a bit radical, doesn't it? Working backwards from ruin. What are you? Are you a kind of doom monger? But actually, we do that all the time in financial services. There's a regulatory requirement known as reverse stress testing when regulators say to financial institutions, well, what would break the bank? What would cause your insurance company to go bust? I'd like you to think carefully about that. We're not saying it's likely, but we're saying we want you to think about the events or combinations of
Mm.
events which would cause that. So actually suggesting we should do the same for the risk management of our global society, it isn't to me radical at all. It's just completely congruent with good good practice risk management in financial services. In fact, what regulators ask
Yeah.
large financial institutions to do.
So we've spoken about alligators, but let's talk about the elephant in the room, which is, so you describe in the paper, the need for assessments, metrics, governance, policymaker capacity, incentives, penalties, etc. But of course, if you take your banking analogy, we were talking about ring fencing and all the regulatory risk functions that were put in place post the 2008 crisis. But of course, the world has moved on. Nobody's been eaten by a financial crocodile at that scale for a while. New people are turning up at the pond and going, "Hey, we overdid it. There's too many fences. There's too many signposts. Sit by the edge of the lake and take your Instagrams." Suddenly the world has moved on, and we can't remember why we've got all this stuff. So is this the time with this, what it probably should be, but how are you going to get people to do all these risk functions, given that's, the elephant in the room? Let's leave it at that.
Yeah. I mean, great, great question, Richard, and thank you for asking it. Um, this is, in many ways, a radical worldview shift. Most, I'm generalizing a bit, for most people in Western society, that concept that we're part of the Earth system, we rely on the Earth system, we need to manage it. This is not how we're educated, unless you're fortunate enough to have perhaps done a specific science degree. So we've got a generation, let's say, of politicians, business leaders, etc., who have never been educated that way. I mean, put another way, a lack of systems thinking, Western reductionist mindset, and because of the risk piece I talked about, believe the risk not to be material, or at least not in GDP terms. So I think one particular elephant we could perhaps zero in on is US climate change policy. And if you look at what I think is a fantastic document from Liberty Energy, bettering human lives, that's President Trump's energy secretary, Chris Wright's company, that very cogently talks about energy as the critical enabler of human progress, and GDP is absolutely lockstep tied to energy. And it quotes one of those climate change assessments, particularly famous one, economist called Nordhaus, and Chris Wright and his team say, well, look, climate change is a thing, but it's not a big thing because look at the low impact on GDP. We should be focusing on much more pressing societal issues. And actually, I would imagine, I don't know, Chris Wright and his team may not have dug into the assumptions underpinning that calculation. They may have gone, well, look, credible economist, some quite helpful analysis for us. Let's run with this. So I think there is. I know I take a long time to answer your question, but I think that framing is really important. We have a massive job to do in re-educating people that we live in a biophysical reality, and then also educating them on the level and proximity of the risk. You won't be surprised to hear we haven't had a call from the White House on this paper and how they
Yeah,
could incorporate and adopt it.
yeah.
That's not surprising. But we have met with UK policymakers, the World Bank, to see how we could link up with ministries of finance who might be interested in this. We'll be talking about planetary solvency and publicising the risk dashboard for the next three months, running a session at the Global Tipping Points Conference in Exeter in June, and really hoping that we can identify some pathfinders who we can work with to kind of take this to market, if that's the right phrase. So yeah, I mean, you're right. It's clearly a difficult time for global policy, but I think it's who can we test this with? Coalitions of the willing, and recognising that there is a lot, not a lot, a staggering amount of progress on the energy transition, on the technology, on investment. So I'm, although sanguine about the risks, actually optimistic about the pace at which we can move.
So, and I think that's right, isn't it? There's you've got to find these pathfinders, and a lot of people talk to, California, still Democrat, even in a Republican world, and obviously they've had the LA wildfires, so they're having to react to that. In the short term, socially, politically, as well as long term, building up the resilience against that. If you look at the UK for a moment, I mean, obviously you've got a government which is just, having gone through the spending review, etc., is going to tell us what they're going to do with the UK Wealth Fund, on growth and industrial policy, as well as resilience. And if we're going to build, this is coming off the weekend when Heathrow shut down because, we had the power plant failure. And the effect to the economy, all of these, we have so many examples of perhaps the points you've made, some of them just within man-made infrastructure, such as that Heathrow example, but others, Valencia and Germany and so on and so forth. And I think Nice earthquakes recently, much more related to planetary boundaries. You've got this UK government supposedly going to be in bringing a lot of these things together in a system view, grow the economy, generate the revenue, look after the things people care about, as well as actually build resilience. Do you see a dialogue, or is there an opportunity for a dialogue where you can bring this kind of dashboard into their internal planning, and maybe even some of their, maybe too much, but their external communication?
Yes, I think so. Um, and I think it's going to be important to link this to what you could kind of call policy of the risk currency. What are the topics? What's on their agenda? So GDP, national security, and not nature, but climate change in particular has been recently called a security blind spot. A recent Chatham House IPPR paper led by Laurie Laybourne. So Tim led myself and others have been working to navigate the climate and nature risks we write about flow through to impact the critical human systems that underpin our society and economy: food, transport, water, energy, human health. So I think there is a risk side of it. Like let's see how we can communicate the risks more effectively in the currency which policyholders are most concerned with. But I also think there's an opportunity piece. How can we, the financial sector, come together with the real economy and with policymakers to really accelerate that transition financing, really kind of supercharge the transition. And that's where I think there is some really good mood music coming out of both Hollywood and Westminster. You've got the creation of these public pools of capital, National Wealth Fund, GB Energy, Scottish National Infrastructure Bank, and others. You've got very detailed diagnostics on what needs to happen real economy, whether it's hydrogen, grid interconnectivity, port infrastructure, supply chain, etc. And so that lets you identify precisely what the kind of leverage points, intersection points are to really accelerate this stuff. And I've not personally talked directly to Westminster on this, but I have talked to Holyrood representatives. They're talking again both about Scottish, English government connectivity and collaboration. This and also their willingness and readiness and excitement to work with the private sector to accelerate. And we're talking then not so much about mitigating climate change, but about inward investment, growth, jobs, energy security, energy exports. So I think it's the risks are serious.
Yeah.
But the opportunity is enormous too.
I think, I was listening to a radio show at the weekend, and it reminded me, they were talking about the architecture of London and how things like, plagues and fires, etc., have basically shaped, the architecture of London. And, you need, sadly, a crisis. I'm sure everybody was saying, we're building this place with hay on the roof, and we're making it out of wood, and everybody's stacking everything too close together. And bang, along comes the fire of London, and then after that, everything's built with brick, with separations and planning authorities. The plague is the reason why open sewers get bricked over. I'm sure everyone was saying this is bad, but it wasn't until the crisis that everybody actually put their hand in the pocket. So perhaps we never fail to use a crisis, and perhaps that's where we're at. And highlighting, I think, with the dashboard so clearly as you do, not a sort of a myriad of ideas, but a very clear sort of time scale against scenarios, with impacts both on sort of scenarios on nature and people and society and the economy. I think what you're doing is you're really putting that in the hands of people. So I very much commend people to have a look at the dashboard and see how they can find their way through. Is that what comes next? And to communicate and share this and make sure it lands with people as you've described, Sandy.
Yeah, that's amazing. So writing these papers, well, it's a bit like running marathons. You finish one and you think, I'm never doing that again. And 6 months go by and your mates kind of talk you into one. But they're also a bit like getting engaged. The minute you get engaged, the next question is, so when's the wedding? So yeah, we've just launched this, as you say. I hope it's clear on risks, a definition of climate, nature, economic, societal, and mortality risk. We really hope that also by providing a very clear, structured risk impact definition that will help with communication. And it's important to say this isn't a prediction. We're not saying these things will happen.
Yeah.
We're saying these things might happen or become more likely if we don't change course. And we don't say this lightly. Talk about the risk of planetary insolvency. So catastrophic or extreme impacts are eminently plausible, and those could threaten future prosperity, and very explicitly say this is a national security issue, as food, water, and heat stress will impact population. And just to give a little flavour of the definition of catastrophic impacts, we're talking about severe economic contraction. We obviously don't know that will happen, but if the climate and nature risks occur, catastrophic warming we define as over 2 degrees Celsius or more by 2050, triggering or partially triggering a high number of climate tipping points, breakdown of critical ecosystem services. This is food, water, that kind of stuff, major extinction events, ocean circulation being impacted, severe socio-political fragmentation, catastrophic mortality, events from disease, nutrition, thirst, and conflict. So this is pretty
Yeah,
sobering
yeah.
stuff. So I guess high level plan, push planetary solvency and the concept till June in the tipping points conference, and then see if we can identify some interested parties to work with to identify those pathfinder countries and organisations to develop a proof of concept and see if we can roll it out more broadly. Um, my as we kind of talked about, my concern is policyholders and decision makers currently are, broadly speaking, I know lots of people have their eyes open, but are blind to the level and proximity of the risk. So if we can kind of institutionalise this and get it adopted, maybe that's going to be effective in driving the policy decisions we need to mitigate the risk.
I suppose one additional question, which is just in terms of pricing this in, people look to the insurance and the reinsurance markets, and that trickles through the financial system. Putting aside policy, how will this get priced in, and then perhaps that gives, if there was a repricing, that would give something like the UK government the ability to say, look, here's the cost of this, which is why we've got to, be resilient, do the adaptation measures. That then changes, the sovereign value of the UK because it's actually built in its measures to adapt to these shocks, and therefore, we can do something separately as opposed to this whole argument, man in the pub argument. Well, we can't do anything without China and America kind of stuff.
Yeah, I mean, great question. Raises a lot in there to unpack. I think if I start at the back, that argument, we can't do anything China America. Actually, Britain can do a huge amount in terms of influence, innovation not just in the real economy, but also in financial structures, public-private. So I think there's actually a massive amount Britain can do, and arguably already has done. Um, how does it get priced in? And actually, does it get priced in? I mean, financial models are typically quite short term, so discounted cash flow
Mm.
models will typically look at short term cash flows and extrapolate them and discount the future. So I really worry that it won't be priced in.
Mm.
And actually, if you look at the dynamic in America currently, the risk environment is increasing, and insurance companies are simply withdrawing.
Yeah.
So you have homeowners and businesses who are unable to access insurance, or unable to afford the insurance they can access, or state steps in and provides insurance, but typically below market value. So your house is insured for half its value, so you cannot afford to rebuild. So capitalism, and these are insurance companies acting as rationalist
Yeah.
rational capitalist entities protecting their solvency, their balance sheet, their risks, which they're regulated to do. So there's a real risk that insurance withdraws, that hits property values. Obviously, seen how that can reverberate through the financial system. And we've also, I think it's fair to say, seen that the market tends to react to events rather than predict
Yeah.
events, particularly successfully. So, I mean, I think your idea is absolutely logically very sound. We ought to be able to see the risks, the impact, the adaptation that would feed through constructively in some market pricing. And I guess my concern is that we might see kind of Minsky moment type of events, both on the physical risk side and also from the transition risk side.
Yeah. Well, as we were chatting, it's the Big Short. All over again. Perhaps I won't imagine the situation of us sitting in the bath, and explaining that to people. That would, as per the film, that would ruin people's lunch. Sandy, thanks so much. Thanks for keeping running these marathons as you've I've left you with a terrible visual image there. But it's so important that we read these, understand these. The dashboard, I think, is a brilliant way of bringing it all to life. So time is short. Thanks so much for now, Sandy.
Thanks,
See you
Richard.
soon.
Really appreciated.